Hey guys, welcome back to my channel. So something really strange is going on with US dollar lately. Even some of the most experienced analysts are saying this time feels different. Especially when we look at the dollar against the Japanese yen and euro, it's been dropping fast. Since I work and live in Japan and I earn in Japanese yen, so I'm always watching the US dollar/Japanese yen rate. On April 22nd, I saw the dollar fall below 140 yen, and many Japanese experts are now saying it could even go as low as 130. Most don't think it will break 100, but still, the dollar is definitely losing ground. And here's the interesting part. It's not following the euro pattern. A few days ago, I just watched an interview with Hisashi Yoshida, and he's the chief FX advisor at Monex Japan. And what he said really caught my attention. He believes there's been a fundamental shift in April 2025. Until now, it was simple. When US interest rates goes down, the dollar weakens. And when rates in Japan or Europe are lower, the dollar stays strong. Because investors chase yield, right? But in April, something changed. US bond yields actually went up after the government announced new tariffs. So normally the dollar should have gotten stronger, but instead it kept falling. That's a big red flag. So what's going on? Let's look at the data. Back in January, US dollar/Japanese yen peaked at 158, but by the end of March, it had dropped to 150. That made sense. The interest rate gap between Japanese yen and the US was shrinking. But in April, that gap started growing again. US rates dropped, still the dollar kept dropping. So the usual link between rates and exchange rates seems to be broken. And it's not just the Japanese yen. The euro did the same thing. Even though Eurozone rates are still lower than the US, the euro went up. So what does this mean? Yoshida's view is market is starting to doubt the US, not just interest rates, but the whole economic and political outlook. After the new tariff policy, international investors are feeling uneasy. They are rethinking whether US assets are still the safest place for their money. When that trust fades, money moves elsewhere. That's why this is not just an interest rate story, it could be a sign of a bigger shift, a long-term realignment of how global money flows. So if US dollar is no longer seen as ultimate safe asset, that's a big deal. It could change the global financial systems as we know so far. So is this a start of something bigger or just a temporary shake-up? Drop your thought in the comment. I'd like to hear what you think about this. And if you enjoyed this video, please don't forget to like, subscribe, and hit the bell. I will see you in the next one. Bye.